Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. So today we would like to present the master budgeting for Perkasa Sendirian Berhad. So our team members are Siti Sarah, Nurdinie, Nabilah Adani, and myself, Tengku Syarah. So the table of the content, which is introduction, the master budget, and conclusion. The first part, introduction. What is budget? So budget is a detailed plan for the future that is usually expressed in formal quantitative terms. So we can make the comparison between the actual and the budgeted planning. So the figure in the screen shows how the flow of the master budgeting. So we begin from the sales budget and come out with the budgeted income statement and balance sheet. Next, we go to the master budgeting. So the general information given, which is the unit sales for each month, starts from April up until November, which contains the actual and the budgeted unit sales. For the account receivable collection, there are three types of collection, which is 60% is collected during the sales month, another 40% is divided into two, which is 20% on the second and 20% on the third month after the sales. For account payable, it divides into two parts. 15% is paid during the purchase month and another 15% is paid on the following month after the purchase. Firstly, we do the sales budget. So in order to calculate the sales budget, we multiply the budgeted unit sales with the selling price per unit for each month. So as we can see in September, the selling price per unit is 210 because it states that selling price per unit will be increased by 5% due to the increase in the raw material by 5% in August. So the quarter is also become 210 because this price will be forwarded into the next month. And we get the total budgeted sales for the quarter, which is July, August, and September, which is 11,100,000. We compute the schedule of expected cash collection for each month, which is it begins from the May up until September, but also included in November because there are 3 months ahead that they have to collect, and we have to compute the October and November also. So we calculate the account receivable based on the given information, which is 16%, 20%, and 20% for each month ahead. And the total cash that we receive for the quarter, which is on July, August, and September, 10,920,000.
Okay, next me, Siti Sarah binti Mohdar will explain for the production budget and direct materials budget for Perkasa Sendirian Berhad. Okay, the required production is determined for the entire quarter from July to September using this calculation. So first of all, since Perkasa Sendirian Berhad has decided to maintain 25% of the budgeted sales for the next month, therefore we obtain direct ending inventory for July by multiply 25% with the budgeted sales of the next month. The total needs is determined by adding budgeted sales with desired ending inventory. However, to get the beginning inventory for July, we calculate first the desired ending inventory for June. For the standpoint of the entire quarter, the desired ending inventory, which the company assumed to be 5,750 units, is the same as desired ending inventory for September. And then similarly, the beginning inventory of the quarter, 4,375 units, is the same as the beginning inventory for July. Next, we look at the direct materials. The materials to be purchased is computed by using this calculation. Okay, first of all, in order to get the total raw materials cost per unit, we need to multiply 30% with RM200 of selling price, since the total cost of raw materials to produce a pair of shoes is 30% of selling price. Therefore, we get RM60. However, the cost of raw materials increased to RM63 starting August, since the supplier increased the raw materials price by 5%. And then the desired ending inventory is computed by multiply 20% with the next month of production needs. The total raw material needed is obtained by adding production needs and desired ending inventory. For the beginning inventory for July is obtained from the balance sheet. Overall, we can see that the company plans to purchase 3,314,000 and 62 ringgit of raw materials for the third quarter. Now we move to the cash disbursement. This schedule shows the company's expected cash disbursement for materials purchased for the third quarter, which is RM 4,105,912 ringgit. So this is the calculation of the cash disbursement of each month, which the company expect to pay the account payable of 50% during the purchase month and 50% on the following month after purchase. How we get this value? We multiply 50% by materials to be purchased, and then this is the unpaid September purchase that will be included in the balance sheet. Okay, that's all from me. Thank you.
Bismillahirrahmanirrahim. My name is Nurdinie, binti Mohmad Latiff, and my matric number is 1182390. Okay, we proceed with direct labor budget. Direct labor budget for Perkasa Sundaram Berhad shows the total direct labor cost and the number of direct labor hour needed for the production. It helps the management to plan its labor force requirement. The direct labor budget is a component of master budget. It prepared after the preparation of the production budget because the budgeted production in each unit figure provided by the production budget serve as the starting point in the direct labor budget. Then the direct labor hours requirement for each month is computed by the multiplying the number of units to be produced in each month by 3 hours required to make one unit. Therefore, in July, 52,125, in August, 53,250, and September is 62,250 are the labor hour required. And the direct labor requirements are then translated into the budgeted direct labor cost, which the company will pay RM 18 ringgit and 50 cent as their hourly wages rate, and then multiply with their labor hours required. Therefore, the total direct labor costs are stated below.
To know the manufacturing overhead budget, firstly we need to know the budgeted direct labor hours, variable manufacturing overhead rate, variable manufacturing overhead cost, fixed manufacturing overhead cost, and then we sum up to get the total manufacturing overhead cost. Next, we need to deduct the depreciation value in order to get the cash disbursement for manufacturing overhead. For the quarter, the cash disbursement for manufacturing overhead, the value is RM 1,822,875. We add up the values from the July, August and September. Next, to determine the predetermined overhead rate for the quarter, we need to take the total manufacturing overhead value, which is RM 1,952,875. Then we divide with the budgeted direct labor hours, which is 167,625 to get the value of 11 ringgit and 59 cent. Next, for ending finished goods inventory budget, we need to calculate the unit product cost. Firstly, we need to know the direct labor, which is the cost is RM 18 ringgit and 50 cent. We multiply with the quantity, which is 3, to get RM 55 ringgit and 50 cent. Next, the manufacturing overhead cost RM 11 ringgit and 59 cent times with 3 to get the RM 34 ringgit and 77 cent. Then we add up these values, including the direct materials value, which is 63 ringgit, to get the value of unit product cost, which is RM 153 ringgit and 27 cent. Next, for ending finished goods inventory, we take the value of ending inventory in units, which is 5,750. We times with the unit product cost, which is RM 153 ringgit and 27 cent, to get the value of RM 881,312 ringgit 92 cent.
Okay, next, for the selling and administrative expenses budget, okay, the budget for Perkasa Sundaram Berhad selling and administrative expenses budget is shown in the table below. The selling and administrative budget is separated into the variable and the fixed cost component, just as the manufacturer overhead budget. As a result, each month's budgeted sales are recorded at the beginning of the schedule. These numbers are based on the previously estimated unit sales. Okay, then budgeted sales will multiply with the variable selling and administrative expenses rate, which is RM 10 ringgit, so we can get the variable expenses. And from the variable expenses, we will add it with the total fixed selling and administrative expenses, so we can get the total selling and administrative expenses. After that, we will minus with the depreciation expenses to get the cash disbursement for selling and administrative expenses budget.
Next, we go to the cash budget. So how we perform the cash budget, which is we begin with the beginning cash balance for each month. So for example, in July, we take the beginning cash balance from the balance sheet as in June 30, which is cost 120,000. So we add with the cash collection for each month from the expected cash collections. And the total cash available is a sum between the beginning cash balance and the cash collections. And then from total cash available, we minus with the cash disbursements for material, direct labor, manufacturing overhead, selling and administrative, and the machine purchase, which is all the budgeted. And then as we can see, there is a machine purchase in the July, but no in August and September, because it states that the Perkasa only purchase a new machine in July. So we just leave it blank in August and September. So for the excess and the deficiency, which is if the total cash available is less than the total disbursement, it means that there is a deficiency in the company. And then, as we can see, there is a deficiency in the July, so we need to borrow. So the company need to borrow about 625,000. So the total financing is a total borrowing. At the ending cash balance, which is 100,194. So this ending cash balance in July will be beginning cash balance in August, and the same stats is occurring, okay, where the total cash available minus with the cash disbursements, and it's come for the August and September, it becomes the excess, since the total cash available is more than the total disbursements. And in August, there is no borrowing that need to do. And in September, we have to make the repayment in the borrowing in July, which is the 625,000, and plus with the interest, which is 18% per annum. But since it's per annum, so we have to time with the 3/12, which is 3 months. So we get the 28,125. And the ending cash balance for the quarter, which is 336, 826.
Okay, next, the budgeted income statement. Okay, the budgeted income statement has all the same item as the standard income statement, but it is a projection on how the income statement we will look in the future budget period. The budgeted income statement is very useful for determining if a company expected financial outcome are fair. Okay, this is the data of the budgeted income statement of Perkasa Sundaram Berhad. Okay, the sale of around 11 million and 100,000 ringgit come from the total budgeted sales of the quarter. The cost of goods sold of 8,353,380 ringgit and 76 cents can be computed by multiplying for 54,500 units sold by the unit production cost RM 153 ringgit and 27 cents. The selling and administrative expenses of 1,325,200 ringgit come from the total of the selling and administrative expenses previously. Finally, the interest expenses of 28,125 ringgit come from the cash budget calculation for the interest payment after borrowing. Therefore, the budgeted net income of Perkasa Sundaram Berhad is RM 1,393,361 ringgit and 24 cents.
For budgeted balance sheet, we need to know the total assets and total liabilities and stockholders' equity. Firstly, the total asset, we need to have the cash, which is RM 336,825.50, plus with account receivable, which is 1,680,000, plus with raw materials inventory, which is RM 299,250 ringgit, and plus with finished goods inventory, which is 881,312.92. then we can obtain the value of total current assets, which is RM 3,197,388.42 cents. Next, for the net, below the total current assets, we have the plant and equipment and accumulated depreciation. This is because we need to compute the net plant and equipment. To compute this, we must deduct the plant and equipment with the value of accumulated depreciation, which is 150,000. So we get the net plant and equipment, which is 3,200,000 ringgit. Okay, next for the total asset, we add up the value of total current asset, which is 3,197,388.42 plus with the net plant and equipment. Then we get RM 6,397,388 ringgit 42 cents. For liabilities and stockholders' equity, we add up the value of account payable, which is 672,525 ringgit, plus with the common stock, which is 2 million, and plus with the retained earnings. The retained earnings can be obtained by adding the value of beginning balance, which is 398,813 ringgit, plus with the net income, which is 1,393,361.24 cents, and plus with the dividends. That's why we get the retained earnings, which is 1,792,174 ringgit and 0.24. Then we add up these values to get the total liabilities and stockholders' equity, which is 4,464,699 ringgit 0.24 cents. In conclusion, a master budgeting is a costly business strategy that encompasses future sales, production levels, acquisitions, future costs, capital investment, and materials to be purchased. In other words, it incorporates all other financial budgets as well as a planned income statement and balance sheet. That's all from us. Thank you.